Hello, everybody. My name is Libby Greer, and I am so grateful that you've come today to our webinar today. And we have Joe Scarano here, and he's going to talk to all of us about software for accounting. Again, who's counting your money, and what are they doing with your money, or what are you doing with your money, especially your grant money? Because one thing's about grants, sometimes you get enormous amount of money, anything from maybe 10,000 to hundreds of thousands or millions of dollars for your grant writers. And what are you doing with it? So you do need a software, you do need accounting software and other equipment or software to help you with those dollars. So today, Joe is going to be able to tell us a little bit about it. Again, I'm Libby Greer, and I'm the executive producer and director for WYTV7. Our core values are integrity, transparency, inclusive, and resourcefulness. And so that's what we like to do. We like to be able to bring all these educational information to you. I am a group leader on Alignable, as well as I am an ambassador with Alignable, and I am the executive director for WYTV7. And these meetings are for you, again, nonprofits, executives, and their administrators, because we're trying to help you grow your nonprofit. If you want to connect with me, there's several ways to connect with me. If you have your iPhone or your Android, you can hover over the QR codes and connect with me there at our resource. My phone number is there. You can go to my website, or you can connect with me on Alignable. So I'm available to you to try to answer any questions that you may have for me, or any resource that I have. I'll be happy to share it with you. Then we have my partner, who is Mark Prokop, and Mark is also with Alignable, and all his credentialings that he has, local business person of the year 2023, and he's a local business person of 22. And Mark is with Pro Fitness, and all his information, if you want to get in contact with him, his website, his email, and his phone number. So what we're going to do is now I'm going to go ahead, I'm going to stop sharing, and I'm going to go ahead and turn everything over to our guest today. And Joe, we thanks again for coming over and sharing with the nonprofits about this accounting, and who's counting your money and what are they doing with it. So without further delay, we're going to go ahead and let you talk to Joe. Thanks, Joe.
Thank you. Thanks, everyone. Libby, Mark, I appreciate you having me here today. And thanks, everyone, for joining us during today's podcast. So Libby and Mark reached out to me for one main specific reason. I've been working with nonprofits for the better part of 40 some odd years. I hate to say that long, but starting in the 80s as a public accountant in New York. The firm I worked for as a CPA, our main client base was nonprofits. So we did accounting, we did auditing, we did bookkeeping, we did consulting. And for those who remember the early 80s, that's when PCs were introduced. So our software company evolved out of our accounting firm. When PCs were introduced and accounting firms and companies started bringing in PCs to help them out, we decided to develop an accounting application specifically for nonprofit organizations. So I like to say that software became my ticket out of public accounting. So we're in North Carolina now. We've been here for over 30 years, and our company Arrays, we specialize in providing software solutions to the nonprofit industry. We have about 1,200 users worldwide. Our systems are now in the cloud. We introduced the cloud version of FastFund in 2012. Our company again is Arrays, and our product is called FastFund Online. I'm not here really to promote our product, specifically. I was invited to educate you all on proper fiscal management as a nonprofit. So, I working with nonprofits for over 40 years, I understand the wonderful work that you're all doing, whether it's social services, whether it's a school, whether it's religion-based or arts-based or environmental-based or any kind of nonprofit. You are all helping the community. The nonprofits fill a void that really is not being filled by government agencies or by corporate America. So nonprofits fill that void, and actually nonprofits is the third largest industry here in the US. And so you are fulfilling, certain respond or certain needs in your community. And the most important thing, obviously, is your mission. But without proper fiscal management, it's really, really difficult to conduct and perform your mission effectively and to be an ongoing, sustainable nonprofit entity. And a lot of people that I talk to over the years, they really they minimize the importance of proper fiscal management. So they might neglect doing their bank recs. They might neglect preparing financial reports, and that really will jeopardize the future and health of the nonprofit. So when we come in, we try to emphasize that proper fiscal management for a nonprofit is utmost importance, especially with the fiduciary responsibilities that board members have, as a board member of a nonprofit. So the difference between nonprofit accounting and for-profit accounting is really transparency and proper stewardship of funds. Whether your funds are coming from donors, whether they're coming from grantors, whether it's government grants, private grants, from foundations or corporate grants. As a nonprofit, you really have to provide proper stewardship of those funds. I like to draw kind of a parallel. If you walked into a local bakery and bought a loaf of bread, used to be a loaf of bread was $2. Now it's probably $5 or $6. But a good loaf of bread, all you really care about it is when you bring it home, it's fresh and it's tasty, and you can share it with your family, and everybody loves that loaf of bread. What the bakery does with that $5, you really don't care. I mean, if they put that money and pay their employees, great. If they take it and expand their business, great. Bake more bread, great. But as long as you get a fresh, tasty loaf of bread, that's all you really care about. But as a nonprofit, whether it's $5, $500, or a $500,000 grant, you have a certain responsibility as to who's giving you that money. If that money needs to be used for the running of your organization, and the running of your organization is not just your mission. There's administrative costs, there's fundraising costs, and I'll get into that in a little while as to why that's really important. But again, as a nonprofit, all of the funds that you come in, you need to properly organize those funds based on specific categories, whether it's a designated revenue for a specific purpose or undesignated where you can use it as you see fit. But the bottom line is your money is going to be used to benefit the nonprofit, to help you conduct and fulfill your mission. So that's the key difference in nonprofit accounting and for-profit accounting. It's stewardship of funds. And then, of course, there's transparency, to your funding sources, to the general public, and of course, to governing agencies, your state and the IRS, that you are reporting as a nonprofit. Once you receive your 501c3 status or whatever nonprofit classification you have certain obligations as a nonprofit to both state and local governments, state, local, and federal governments, that you fill your annual returns. It's not a tax return, it's called a 990. And so it all starts with having proper systems in place. So with your accounting system, you have to make sure that all of your revenue coming in and expenses going out are classified properly. So it starts with your revenue. If you receive revenue that's designated for a specific purpose, you need to make sure that you can demonstrate to the funder that the funds given were used for their designated purpose. That's sometimes referred to as functional accounting or designated or undesignated funds. Then when you spend your money, every nonprofit needs to categorize their expenses by 3 categories: who, what, and why. The who is, who did you pay your expense to? Was it for utility bill? Was it contractors? Was it payroll for salaries? That's who the expense was incurred for. The what is what type of expense? Is it a salary expense, a telephone expense, utility expense, rent expense, and so on? The why is the third piece of the equation, which for-profit businesses typically don't have to worry about the why. The why is it's an expense either for management in general or administrative costs, fundraising costs, or the cost of raising funds or development, or mission-based program expenses. That's the why you incurred the expense. And those are referred to as functional expenses. So there are two broad categories. There's program-based expenses, then there's support services, which is management in general, and fundraising. So it's really important that you understand why you are incurring expense and record it properly. Even if you don't have to do a full 990, even if you don't have an annual compilation review or audit, this is for your own internal management of each of your individual programs. If you know how much a program is costing you, what your expenses are for those programs, you know then how much revenue you need to generate to make that program sustainable. You want to make sure that you're bringing in enough resources to cover the expenses for each of your individual programs. And so getting your accounting system in place is tantamount to proper nonprofit management. You want to make sure that you're running your programs effectively and your finances are set up properly, that you could manage and generate your financial reports on a on-demand basis to see exactly where you are, what your fiscal position is. So it starts with your accounting system. Depending on the size of your organization, you can get an off-the-shelf accounting application, but they are not really designed for nonprofits. You can hear people say, well, I'm using X or Y, and X or Y are, the most common accounting software applications in the world, and you all know who I'm talking about. You could use a package like that, but it's not going to give you proper nonprofit reporting. You can try to fake it out and do certain things to make it work, but it never works. As I said, I've been in the business for over 40 years, and the majority of our users, they're coming from the off-the-shelf accounting applications because they finally throw in the towel. And so if you're interested in a nonprofit specific accounting application, you could check us out. You can go to arraise.com, ARAIZE.com, and you could get a demo of the software, sign up for a demo, or you can even get a trial version of the software. We have a fully functional trial version of the software. And so having all your accounting is very important. Again, you could use any off-the-shelf accounting application, but you're going to hit a brick wall at some point where you're not going to be able to get proper nonprofit reporting. You're going to have to export your data to Excel, manipulate the data in Excel to try to get proper functional reports for all of your programs, all of your functional areas. What makes nonprofit accounting even more complex is where is your funding coming from? If your funding is coming from all private donations, then it's not that difficult to categorize those donations, because typically someone's going to donate to your nonprofit, and we like to call the donation no strings attached. If someone sends you $100 donation and you use that as you see fit within your organization, but you might have an instance where someone is donating funds for your after-school program, or maybe you have 4 different programs: an after-school program, a childcare program, a shelter. And so someone says, they send you a check and say, I specifically want this to be used in your after-school program. So that's where the stewardship of funds comes through. You want to make sure that when a donor designates what they want their funds to be used for, that you could demonstrate back to your funding sources, donors, grantors, that their funds were used for their designated purpose. And also, when it comes to budgeting, budgeting is really key to nonprofit accounting, especially if you have grants. You need to be able to match your actual expenses against your grant expenses. Usually the grant process starts with you find a reasonable suitor that will give your organization a grant. So let's say you submit a grant proposal for $100,000. Now, you're not going to submit a proposal where you say, could you give us $100,000? Whomever you're sending that out to, they're going to say, yeah, we'll give you $100,000. What are you going to use it for? Oh, what am I going to use it for? That means I need to put together a grant budget. Yes, you do. So you put together your grant budget. How much are we going to spend for salaries? How much are going to be spent for, each salary position? How much for payroll taxes? Are you asking the grantor to also pay for fringe benefits? And then you've got program supplies and you've got counseling and how are you going to spend that money? Rent and utilities. So there's your grant budget. If you're fortunate enough where the grantor says, yes, we know you're doing great work, at your apple tree nonprofit or whatever, and here's $100,000 based on your grant proposal. And you say, oh God, we got $100,000. What are we going to do now? Well, you're going to record that grant budget in your accounting system, itemizing the $100,000 in expenses to match your grant budget. Every month, you should be able to generate a report that says, here's how much money we actually spent in this program that's being funded by our grant. Here's the grant budget, and are we over or under our budget? And hopefully you are not over your budget. You are in line with your budget with proper recording and reporting. And then at the end of the grant period, whether it's a 6-month grant or a 12-month grant, whatever the grant period is, you go back to the grantor and say, we really appreciate this $100,000 grant. This is how it impacted our community. It was a wonderful thing that you did for us for this $100,000 grant. Could you give us another $100,000 grant? You'll have a better chance of renewing that grant if you provide to the grantor proper grant management, when it comes to fiscal management. At the end of the year, if you can't demonstrate how you spent their $100,000, good luck renewing that grant. So it's really, really, really important. So our software is managing money after it comes in. So how do you get that money? If you're relying specifically on donations, you need to have a fundraising management system, a CRM to manage your donors. So when someone donates to the organization, you want to know, who they are, how did they hear about your organization, how much they donated, and if possible, gather as much information as you can about that donor. What are their personal interests? You might be able to find out, with online resources, companies like Donor Search and GuideStar, and there are a lot of other resources available where you're able to do some data mining on your donors and find out, where have they donated, what other organizations they've donated to, what organizations are they a member of? Are they a member of a specific church, business association, Knights of Columbus or something like that. And so, as much information as you can gather from your donors is going to help you raise more funds. When a donation comes in, you want to make sure that you acknowledge the gift. If it's $1 gift or $1,000 gift, the worst thing that you can do is receive a donation and not acknowledge it to the donor. You want to thank that donor for their donation, regardless of the size, because they're donating to your cause for a specific reason. And you want to show how much you benefit. How much you are, much appreciate and how your organization is going to benefit from that donation. So a CRM application is separate from accounting, but if you can get a system that integrates them both into a single solution, then you don't have to deal with importing data from a third party, another application, exporting it, then importing it, and then trying to reconcile. With different systems, the fundraising system could say, well, we got a donation from Jane Smith for $1,000. And the accounting system says, well, we only see a Jane Smith donation for $100. Why are they different? And you have to try to figure out why there's a difference between the two systems. And so then the next piece is payroll. There have been a couple of questions that came in about taxes, and I will answer those once we go over the third piece of the puzzle. So piece number one is accounting, proper fiscal management. Piece number two is proper donor management, CRM. And if anybody has any other questions about fundraising CRM applications, I can answer as best I can. But then the third piece is payroll. So if you have staff, the key to nonprofit payroll is the allocation of that staff to the proper functional area. I mentioned functional areas before: your mission-based programs, your management in general, and your fundraising. So when you're paying someone's salary, that salary and related payroll taxes needs to be charged to where that person works within your organization. And it's really not uncommon for someone in a small nonprofit to wear a lot of hats, where they spend time in your daycare facility. They also spend time in your after-school program. They also spend time in your shelter. And it's possible that their salary is also being partially funded by a grant. Maybe someone's $50,000 salary is supplemented and paid, half of it by one grant and half of it by another grant. So that's, again, where grant budgets come into play. But most importantly, when it comes to salary, you need to properly allocate all salary expenses to the proper areas where those individuals worked, whether it's broken down by fixed hours or that they work during a payroll cycle, or percentages, or just based on specific funding by grantors to fund someone's salary. So you have accounting, you have CRM, donor management for your donations coming in, and then payroll. So that's the three financial management pieces that, if you could get a system or systems that seamlessly integrate and talk to each other, it's going to make everyone's life a lot easier within your organization. So then the last thing is you have taxes. A lot of the nonprofits think they don't have to pay taxes. Well, they do. First, as a nonprofit, if you have employees, you have to pay payroll taxes. I ran into a situation a bunch of years ago with a local nonprofit where, I don't know who informed the executive director, but he didn't think he had to pay payroll taxes. So a couple of years went by, they didn't file any 941s, and then the IRS caught up with them. And unfortunately, it was not a good situation for that nonprofit. As a nonprofit, if you have employees, you are subject to payroll taxes like any other business. You have Social Security and Medicare for your employees paid to the federal government. As a nonprofit, you are exempt from federal unemployment tax, so you don't have to pay FUTA. But if your state has state income tax, you have to collect the personal income tax from employees and then pay the state. I mean, that's an employee tax, not an employer tax. But your employer tax will be state unemployment. And depending on which state you're in, there might be training tax or other state taxes. With our payroll software, the biggest pain in the butt is trying to manage all of different state taxes that we have to track. The state of Washington and Oregon and California are three Western states. They have a lot of different employer taxes for their employees. So you are subject to all of those taxes. Religious organizations have certain exemptions, and that's another discussion for another podcast, because they're a completely different animal. Religious organizations and pastors and their exemptions. So you do have to pay taxes. Now, if you own let's say you're a museum and you have a gift shop, you have to collect sales tax for what you sell in that gift shop. So again, that's another tax that you are subject to. I mean, you're technically not paying the tax. The customer in the gift shop is paying the tax, but you have to collect it and file your quarterly sales or monthly sales tax returns. So that's another obligation you have as a nonprofit. And then there are unrelated business income tax. They call it UBIT, UBIT. That's when a nonprofit has a business that's unrelated to their mission, and that part of their business, that unrelated business, might be subject to income tax at the federal and state level. But again, you need to talk to a CPA about that. I have not practiced public accounting in over 30 years, so I'm not up on all of that. So what do you have to do? What are your obligations as a nonprofit when it comes to filing returns? I mean, you can call them a tax return, but there's no tax on the return. It's called a 990. And there are different levels of 990, just like when you file your income taxes, there's the 1040 EZ and then the full 1040. And as a nonprofit, there is a 990N, which used to be a postcard. It's no longer a postcard. You have to now file that online with the IRS. And that's nothing more than, yes, we were still in business in 2022. Yes, these are our board members or treasurers or executive directors. And yes, our revenue was less than $50,000 a year. I mean, those are questions that they ask online, and you filed your 990. So that's the first 990 that has to be filed on an annual basis. Then if your revenue is greater than 50,000, but less than 250,000, you filed what's called a 990 EZ. So like the 1040 EZ, it's an abbreviated 990 where it's not asking for a lot of information, but you have to still file a 990. The full 990 is if your revenue is over 50,000 and I'm sorry, over 250,000. And that has a significant bit more information. You have to break out your functional expenses. You have to list donors over a certain dollar amount, list your board members, list what your mission was, and a lot of other specific information. So that's about it again for my time in today's podcast. I really appreciate everyone tuning in. I hope it was helpful to you to understand the importance of proper fiscal management. If you are interested in taking a look at what Arrays can do to help out your nonprofit, you can go to our website again. It's arrays.com, and that's ARAIZE. And anytime I talk to anyone in this nonprofit sector, I appreciate all the work that you do, and you're fulfilling a need in our communities that is definitely something that is not being filled by other types of organizations. So well done, and continue doing what you're doing.
Joe, thank you just so much for that. Mark, did you have anything? I know, Joe, I think you answered a lot of the questions that were coming in. And again, we're just so grateful for you to come on, because again, this is about learning, it's about education, and actually you were saying things that, some of the stuff I wasn't aware of. So I guess I just learned something myself. Mark, did you want to capture anything that Joe did, or any other questions that were coming in?
I was gonna sort of add on to what he had mentioned. A couple different things is, yeah, one in terms of the 990, that there's 3 different levels, and I explain to people I do 2 of the 3 levels. I do the first level and the middle level. There are what I call non-IRS partners. that are out there. I use one of them. I can't remember the name of them. Not that it matters really right now. It's just that I know how to process that. I've had to do it for the largest client that I've had for 2 straight years. So, and I do all the other smaller ones as well, for everybody else. So that, and I do we refer. I actually probably have a partner, another partner, a CPA partner that can do things like reviews and audits, and higher level 990s as well. That
Yep.
is here in the area. The second thing was that, yeah, one of my clients does use the array system, and I'm the main person to use it. So I know at one time I did get a phone call from somebody that probably Joe's company they were curious about it, so they gave them my phone number, and I talked to them about it. So I have learned that the interesting, like Joe went back, we don't mention the name of the company, but I had used one of those big companies for most of my nonprofit career, and really got used to them. But it really wasn't until I really switched over with one of my clients to use the Arrays Fast Fund system there that it really, where Joe's company really does show how the other companies really don't have it 100% all together, even though it seemed like they did when I was using it. But of how when you use Joe's system, that it does have all the things, any type of reports that you can try to get out of it, that you had to sort of maneuver around to get those numbers via these other systems. That Joe's system does connect it all, so you can get it. And it took me a little while, as Joe could probably confirm. It took me a little while to sort of make the transition into his company, because I had not seen by using the other systems, I had not seen the way that Joe's system was designed. And I went through like a learning curve myself to understand it. And then it does, and at first it didn't make any sense because of what my whole experience had been, but using it and seeing how it all is connected with each other, that does make 100% sense, and shows how these other systems really don't have everything put together the way that for nonprofits it should be, because they're really more designed for for-profit businesses than anything else. So yeah, it's, so I can always, like I said, if someone want to talk to, as Joe's company would, they refer people to me and other people to talk to, that I can always answer how things are. My company uses 2 of the 3 parts of Joe's system right now. So that's, what I can easily speak to, those 2 of those 3 parts, which is the accounting and the payroll part.
Yeah,
Hey, Joe,
there's actually,
Joe, I got a question for you.
Yes.
Most of the nonprofits is here or on here that is part of this group, they're small. They're really small. Is your system affordable for the small nonprofit that maybe only have 1 employee or maybe 5?
yeah, it actually is. Compared to, again, almost every accounting application now is cloud-based. The software company that I referred to earlier, that Mark also referred to, they are sunsetting their desktop version of their software. They are no longer upgrading it. If you want to upgrade it, you have to move to the cloud. So the pricing of their application is, our system is virtually the same in terms of price. So yes, it is very affordable. We also have a starter application. We call it the LT version. It's only $275 a year to use the software, and it includes both accounting and donor management. Now, the difference between that and our full application, which is a little bit more, on average, as I said, we have 1,200 users worldwide. On average, it's about $100 a month. Now, of course, if you have a lot of employees, it's a lot more, because of, the cost of payroll is significantly higher. And if you have a very large donor database, it's more. But if it's a small nonprofit with, 1 or 2 employees, if they want accounting and payroll, our software is essentially the same price as the off-the-shelf cloud solutions, whether it's coming from again, if it's a big payroll provider, or, the other software companies that have both accounting and payroll. So yes, it's very affordable. And as I said, we have this version that is for the really small nonprofit, and it's only $275 a year. One of the things that really kind of frustrates us here at Arrays is, we'll submit a proposal. Someone really wants to get our system. They've been advised by their outside auditors or their grantors, you really need to get a new accounting system because what you're doing is not sustainable. It's difficult to do an audit. It's difficult to do grant reporting. So they start their search in earnest, and then we'll submit a proposal, and let's just throw out that number. It's $100 a month. Now that's for the use of the software and unlimited customer support and all updates and upgrades. And the board will not approve that $100 a month purchase. And so that for us, it's very frustrating because their utility bills are probably higher than what our software is. So they're somewhat short-sighted in not understanding proper, accountability and transparency and stewardship. And they've been told they need to get new software, but they resist that additional cost. And unfortunately, it hurts them in the long run. So yeah, the answer to your question is it is very affordable. But again, it depends on which applications they need. It could be as low as $275 a year, as high as $500 a month.
So Joe, and another question that's come in, because I was hearing Mark said he's using different parts or components of your software. So there are different components that you use in all those. You don't have to buy the full packet.
Correct. It's modular. So there's accounting, fundraising, and payroll, and you can choose any combination of the three. And the accounting is actually broken down into different modules. We have very specific modules for the really large nonprofits that have grants. It's called indirect cost allocations, where they have indirect cost reimbursements. Some organizations deal with purchase orders. So, we like to joke around here that our pricing is like a Chinese restaurant. I'll take one from column A, one from column B, or you can get the combo meal and put it all together.
Well, Joe, we're getting to the top of the hour. And again, we want to say, if anybody else have any other questions or anything you feel like you need to let people know, again, I'm going to let you tell anybody if they need to contact you. We're going to let you do that again. But we do thank you for coming and sharing. Again, who's counting your money and what are you doing with your money, especially that grant money that's coming in. You want to keep those books and those records, straight, because I'm like you, when the IRS come for you, you want to have everything in order. And if you have a system that's working for you and can make it a lot easier for you, you'll have less headaches and less stress. So Joe, one more time, can you let everybody know again how they can contact you, and then we'll just wrap it up from there.
Okay, just one quick thing, Libby. There was a question that came in that I kind of answered halfway. The question was, do you still need an accountant for your taxes even with the software? The answer is yes, because you need someone who understands the 990. Just as Mark said, he does 2 out of the 3 forms. You really need to have an accountant who understands 990 filings to do your 990 for you. Our software will make it a lot easier to do the 990, but you really want to hire a professional, just the same way that, for a large business that has to do corporate tax returns, I don't know of any, small businesses that do their own corporate tax returns. So yes, you have to invest a little bit in the accounting, in an accountant to do your 990s.
And Libby, another thing in terms of the way that the system is set up, that it breaks it out into those 3 areas, like management in general, fundraising, and like program costs, that's really what you need to actually help file your state solicitation license with the state of North Carolina. When they like those numbers broken out by those 3 different categories, functional areas. So if you don't have even if you have an accounting system that's not tracking them by those type of areas, what somebody, which is usually some accountant, has to do is has to look at every one of your expenses and try to label it to those 3 areas. And then you got to summarize all those numbers, right, to officially get the state solicitation license, because the state wants to know. I mean, because technically certain costs could potentially even be all 3 of those categories. There's always a slight chance. Usually they're not. Usually it's 1 or 2 or one or the other. Like your fundraising costs are usually most of the time is going to be 100% of one cost. But there are some times that there could be a cost that could cross over more than one functional area. So even on that report to the state of North Carolina, you could have a certain line item that's on their form, and you might have to break the number out between those 2 columns like that, So the reports of how all that is done, it does, like it says, his thing just makes it a whole lot easier, because I know what I used to do before using his system for all those years. And I had to go through all sorts of like jumping through hoops to get that final state solicitation license form filled out properly. But with the reports that you can get from when you're coding it, right, when you get your system set up properly through his system, then you can get the report immediately. And then all of a sudden you just print out a report, and then within seconds you're working on that state report without having to work hours and hours ahead of time to get it done. So these are the things, like I said, that I've learned, that I didn't realize that these old systems really were not as good as I thought they were.
All right, Mark, thanks for that. Joe, one last time, let's hear the name of your company, spell it out again. So if someone wants to get that demo, that they can contact you, and
Okay.
you can start helping them grow their nonprofit.
Great. The company is Arraise. That's ARAIZE. And we like to say, you work hard, you deserve a raise.
Oh, I love that. I love that. All right. So
Okay,
that's
thanks,
And the
Libby.
email, and the
Thank you,
email is
Joe.
joe@arraise.com.
Sales, do sales@arraise.com.
sales@arraise.com.
All right.
Okay.
All
There
right.
we
Well,
go.
that's
Excellent.
it. That wraps us up for this month, this day for educational, and we'll see you guys next month. Thank you.
All
Okay,
right.
thanks, Libby.